Sometimes it is amazing to realize how well value investing works. Value investing works really well when you calculate the value properly. You might not have the patience for it, but oh boy, it works so well. In today's video, I'm going to show you an example of a NASCAR racing play, how the proper value investing turned out very well for the shareholders. If you are new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated for microcap stocks, which are ignored and underfollowed by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com. So make sure you get yourself a copy. About 10 years ago, I was involved in 2 companies out of 3 that were in the NASCAR racing industry. In other words, I'm not talking about NASCAR racing teams. I'm talking about NASCAR race organizers. The business of NASCAR is controlled by NASCAR, which is a private organization. And about 10 years ago, there was NASCAR, a private organization, and then there was 3 publicly traded companies: International Speedway Corporation, Speedway Motorsports, and Dover Motorsports. The first 2 were the big players. Dover Motorsports was a tiny company that only had 2 NASCAR events. The other ones, the International Speedway Corporation had Daytona 500, the big names, and Dover Motorsports was a tiny company. And over time, because in the stock market, you constantly have to grow. Those companies were public because they were in the growing phase. They were acquiring more races in order to grow, and they needed capital markets to do it. But eventually they hit a limit. They acquired everything that they could because some of the NASCAR races were in the private hands, and then those public companies were buying them out, and eventually they bought out everything, they owned everything, and there was no room to grow. So eventually International Speedway Corporation and Speedway Motorsports, they went private. And Dover Motorsports stayed public. And I even wrote about Dover Motorsports in How to Profit from the Coronavirus Recession on page 70. Dover Motorsports, the last publicly traded NASCAR company, I said Dover Motorsports is the perfect coronavirus stock because the company hosts NASCAR races. During the COVID sell-off, Dover Motorsports stock was about $2 a share, and it declined to like $1 a share. And I wrote about it on my blog, Classic Value Investors, and I called it a perfect stock because people panicked. Oh, people cannot go to races because of COVID. And I knew the business model because I studied the business model for those other companies and Dover. And to study the business model, I read this book, The NASCAR Way, The Business That Drives the Sport. And in this book, literally the author described the entire business, how the business model works. It's a wonderful business model, and at the same time, it's not so wonderful. So what's so wonderful about it? You see, NASCAR is in the US. I know Formula One is everywhere else. But NASCAR, you have X number of events. I think 30 something events almost every weekend. The NASCAR drivers travel to a location and then they race and then they get points. And then whoever accumulates most points, of course the win gets more points than the second and all the other places. Whoever accumulates the most points throughout the year becomes the champion. So what's wonderful about this business model is that if you own a NASCAR event, let's say Daytona, you have a license to print money because it's not about the facility, it's not about the racetrack, it's about the license to have the right to host the NASCAR event. It doesn't matter if there's another racetrack in town. When NASCAR comes to Daytona, you are the one that's hosting it, and you literally have license to print money because there is very loyal fans. You get, you sell tickets to attend the event, you sell hot dogs at the event, and most importantly, you get broadcasting rights on TV. That's the biggest money that you get, and it's the highest margin money because you don't have to do anything. The cameras come in, they play it on TV, and you just automatically get all the money. So having that NASCAR license, it's a moat. Nobody can touch it. So that's why this business is wonderful. And so when COVID came and the stock sold off, I immediately included it in the wonderful book, by the way, and I included it on my website, and I bought the stock because I knew that nothing was going to happen to Dover Motorsports. And again, Dover was the only publicly traded company at that point. The other were already private. I knew that even if the officials or the government makes people stop going to races, I figured that they would even make more money because they can still hold races with no people, and most of the money comes in from the TV rights. They don't make that much money on selling tickets and hot dogs, right? That's not the best revenue. The best revenue is the TV rights. From the two races that Dover had, it generated 45 million in revenues, right? On average. It's not a growth industry. They just have two races. That's it. But out of the 45 million, about 34 or 35 comes from the TV. So I figured it was no big deal. That's why I bought the stock. That's why I called it the perfect stock. And of course, when stock recovered, I made money on this. But I was involved in this company for much longer than just COVID. And that's why I'm making this entire video to show you how excellent value investing works when you calculate the value properly. Remember how I said that International Speedway Corporation and Speedway Motorsports, the two players, they went public so that they can acquire more NASCAR races. Because the wonderful part of this business is that once you have the race, you have a moat. The not so wonderful part is that one race has a limit. You can only have so many fans. The local market can only take so much. If you want to double or triple your revenue, the only way for you to do it in that space is to acquire someone else's NASCAR race. And that's capital intensive. The negative part about this business. However, because the other players, International Speedway Corporation and Speedway Motorsports, already acquired all the NASCAR races that are available, and there's about 30 of them, there were only two left in the hands of Dover Motorsports that they didn't acquire. In my view, it was just a matter of time before they were going to acquire Dover Motorsports. When they were acquiring NASCAR races before, they were paying as much as $100 million for one race. $100 million. Dover had two races. And Dover's market cap, especially during the sell-off, reached $40 million. In other words, the market was valuing Dover's one NASCAR race at $20 million, and we had the precedent of the other players paying up to $100 million for one race. And one hedge fund manager saw that, and he wanted to be an activist, and he bought in a big position into Dover Motorsports in the 2010, something like that. That's when I started writing articles about Dover. Not so positive articles, because Dover wasn't a very profitable company, because those two races in the hands of Dover weren't that profitable as a company, because that company had a bloated SG&A. That SG&A infrastructure could have been used for 20 races, but they only had two. So as a result, the bottom line, and at that time when I actually looked at it, they were losing money. But eventually, the bottom line was about 5 million from two races. Only 5 million, because the SG&A was so huge. So as a result, investors were never really assigning a big valuation to Dover as a company. And this hedge fund wanted to come in and force the management to sell. And I even met with the guy because he saw one of my articles on Seeking Alpha. At one point he came to Chicago, we had dinner, and he wanted to force Dover to sell to International Speedway Corporation or Speedway Motorsports. And he was doing everything behind the scenes, paying this guy, consulting this guy to force the change. Well, And, he wanted to extract or unlock value because he thought that he could buy at $1 and they could sell for as much as $7. Well, the problem was that the management of Dover wasn't ready to sell, didn't want to sell, and because there's a lot of prestige that comes from being an owner of a NASCAR event. You get to shake hands with the movers and shakers in the industry, and so they didn't want to sell. They were happy collecting the money, getting their salaries, and the market was always assigning such a huge discount because, again, in the heads of Dover, it wasn't that profitable. They were paying a dividend, but there was always this option that at some point they're going to sell. When the price is right, they're going to sell. And this is exactly what happened in November of 2021. They sold for $3.60, which equated to a value of $140 million. So to Speedway Motorsports. Speedway Motorsports acquired them. In other words, it paid $70 million per NASCAR race. So the thesis was absolutely correct. When the value is there, somebody is going to get it. Now, the biggest unknown, of course, was, will this ever happen? Yeah, but how long do you have to wait? Well, in this case, it was about 10 years of waiting for the management to finally say, we're ready to sell. And then the other party finally was willing to pay a reasonable price because they played hardball too. They were like, oh, we're not going to pay you a lot of money. Even though they didn't have a problem paying $100 million for one race previously using the public money, then they had a problem paying that much for Dover. But they did overpay for the NASCAR races back then. $100 million for one NASCAR race was probably a bit too much. But paying $70 million like they just did right now, it's not a bad price. And also you have to think about, this was like the last two races, not in their hands. It's kind of similar to copper in a way, where there's not that many copper projects out there, and the majors, they have to get it. There's only like a handful of properties that are good. That's why Santa Thomas is going to be kind of like that. In my opinion, they're going to have to pay up for it. But the purpose of this video is to show you that there was value there, and it just needed a catalyst to be unlocked. And when that catalyst happened, the parties were ready to transact. It didn't matter what the investors were pricing the stock at, whether at one point it was at $1, then it went to $2, Eventually, it sold for what the asset was worth, which was $130 million, about 70 or so or 65 per NASCAR race. Both parties agreed to make the transaction. The shareholders of Dover made their money, and now there are no NASCAR companies that are public anymore. All of them are public. Every single race is in the hands of the big players, but this is how value investing works. You calculate value properly, you're patient, it's going to happen. Thanks for watching.